asked to talk about China, a subject close to my heart. So.
Gee, nobody's going to read on. You saying we should start?
Excellent.
Okay, so this is Drew Mason, who is a Brown graduate who's done some very exciting things besides being on an aircraft carrier, right. And really was a leader in U.S. companies investing in China, and as you can see from the case, he's been heavily involved. I thought probably most useful way is if we just sort of ask Drew questions. Case discussions are always fun, but I think they're especially fun when the protagonist is right in front of us and at our mercy. So just to start the discussion off, can you just review quickly these three options that China risk finance faced, and then obviously the second question could be, why did you go for peer-to-peer?
Sure. Let's see if I can get this sorted. Yeah, so the CEO, Zane Wang, had his own view really from day one. He knew which option he wanted, but his challenge was to convince his board to support the option that he felt in his heart was the right direction for the company. And although he controlled the company and therefore could do effectively what he wanted, his style was that having a unanimous board was very important. So he decided that he would go the extra mile to get everyone to support the direction. And the three directions, one is really kind of a variant of the other, but involved two were around prepaid cards. When in 2008, when the government didn't allow them any longer to grow a business that grew 10 times in 1 year and would grow easily another 10 times with no additional investment, he had to scramble to think what next. And part of the board really liked prepaid cards as a concept, but without being on the ground and really understanding maybe clearly what some of the challenges were. And there were two variants of it, one that had kind of more of a Groupon type flavor, one which was more of a local homegrown prepaid card strategy. And then finally, there was peer-to-peer lending. And if you ask the CEO, he said, here's the things I'm good at. I'm good at underwriting, I'm good at origination, and I'm also good at risk management. And I've spent 10 years developing these capabilities. So finally, what he had to say to the board during this meeting was, if my relatives were going to give me money to invest, and I had to tell them which of the three models I felt they should put their money in because I believe in it as CEO, it's the peer-to-peer lending. And part of the reason why the challenge around the prepaid card, there was, after the financial crisis, there was a series of regulatory changes. When there's volatility in the markets, you often have more regulatory volatility as well. So they actually also tightened the rules around prepaid cards, which made it obvious that it would be much more difficult also to operate in that environment. But it really came back to, where did he think his key competitive advantages were? He felt that no one, he felt, is as good as doing underwriting as I am, because I've been doing it for 10 years for the largest banks in China. Origination, I've done it for the largest third-party originator in China, so I know I'm good at originating loans. And then risk management, my whole career at Sears, running the largest consumer credit portfolio in China, in the world at the time, his whole career had been around risk management. So he said, I don't see anyone out there that can follow me in this direction. But it was not an easy board. It was obvious to him, the CEO. It was not obvious to the board.
Well, can you talk a little bit about the competitive advantages? I mean, why did this look attractive? You mentioned some of it, that as a chair it had some had a lot of experience in underwriting, evaluating risks. Is there any other reason why this made sense?
Sure. In China, the banks who had been the company's customers for 10 years, so China Construction Bank, Guangdong Development Bank, Bank of China, et cetera, were his clients. So he knew what they were good at and what they weren't good at, and they used his underwriting systems. And for whatever reason, they're not really willing to lend in China to anyone other than state-owned enterprises or extremely wealthy people. So if you're not a state-owned enterprise or extremely wealthy person, you cannot get a credit card, you cannot get a bank loan. So there's a vast market of people that are underserved. Non-mortgage consumer lending in China is 2% of GDP. When Taiwan, Hong Kong, other countries were of similar size, it was about 5 times that, 5 to 10 times that. So it was a vastly underserved market. And why? So then the question is, why aren't the banks able to serve it? And one is regulatory, that the way the Chinese government manages credit formation is they ration it. They don't control it through interest rates. They effectively ration it. So what happens is, if you're a bank and you have this precious resource called capital, there's a line around the building 4 times around of people waiting for that capital. So why should they take extra risk to lend to an individual or to a small or medium enterprise? That's the challenge. But the irony is that 2/3 of the GDP growth and roughly job creation comes from these people that the government won't, or the banks won't lend to. So there's a big market. So that's important in any entrepreneurial opportunity. There needs to be a big market. Then second is, why did the competitive advantage? Why did they feel they could serve it better than anyone else? One of the unique insights that Zane had from working in the lending industry in the United States for a decade is that he knew something that the banks in China perhaps didn't originally appreciate, that individual lending or SME lending is a scale business. It is a scale business. You cannot manually write all these loans. You cannot have an individual human being like we did in the 1970s United States. If you wanted to do a loan, there was a loan officer. You went to him or her, and they decide whether you're good credit or not. That does not work with SMEs or with individual loans. You must have a system. And that's the proven US experience that's been used everywhere in the world. It's a scale business. You need computers, you need algorithms, you need data. This was his insight. Because it's the only way you can do it cost effectively. Because the cost of originating and underwriting a loan, if you do it manually, is such a big number that the economics don't work for you to make a small loan. So there's an economic reason why also these banks were not lending to individuals or to SMEs, because they couldn't get there from here without a system. So Zane actually built the first functioning underwriting system in China. The systems that they're famous names in the US, FICO, Experian, TransUnion, their systems don't work in Chinese because the systems were not double byte enabled. So Chinese characters just can't work in the system. In addition, the systems were designed in a US or European operating environment where there's a well-established credit bureau, well-established data. In China, there are many problems with the data. So Zane's, what he did first is he built these systems for First Bank of China and all the other banks. Ironically, even though you would give the banks these systems, if this is the credit spectrum, and these are really super prime, very wealthy people, they'll go down about this far. Whereas in the US, we'll go way down. So they'll go this far. So there's all these people that really are deserving of credit, but not able to access it. So what he then had is a system where then he said, look, I can use the same systems that I used for the biggest banks in China, but I can use them for doing individual lending. And that will enable me to do what no one else is able to do. I can lend $4,000 to a person, and I can make the numbers work, where other lenders in the black market or the people that do have licenses, they want to lend $100,000 US. And so that was one of his unique competitive advantages, is that he could make a profit and do a smaller loan. Even the NGOs, the people that were in the micro finance business, not to make a profit, but just to service people that needed money, they couldn't go this small because their cost of underwriting was too high. So what was interesting is, even though they don't hold themselves out as they are a for-profit entity, they clearly say that, they don't promise anything different, but they're actually able to do what others can't because they have an information-based system to go down. And we literally almost gave these systems to the banks effectively, and they still for a variety of reasons, incapable or not willing to use them. So that's part of why they felt also it was a window of time where they could have a disruptive technology, a disruptive business model where for a long period of time they could provide this service in a vastly underserved market and not worry about competition. Or if there was competition, it's okay. It's such a big market. You know, there can be plenty of people to enter it, and we can all do well as long as the bad guys don't ruin the market.
So other people, this is not supposed to be a dialogue. Other people want to say anything?
Has there been other people developing automated underwriting systems after Zane's success?
Yeah, it's a great question. And for years, FICO and Experian, which are the really very large multinational companies, have sought to enter the China market. But they've used their existing system and cost structure. And they've had some success with the biggest banks, but actually it hasn't been terribly effective because it's so expensive. In addition, they don't have the team of people to do the service provisioning, to teach, to do the training on the ground cost effectively. And then finally, their systems are designed to work in a European or Western operating environment. It needs to be calibrated, you know, for a Chinese operating environment where you have different data, different problems, and so they've had a real challenge. In terms of a smaller, like peer-to-peer lender or a competitor trying to develop their own system, typically what they've done is they've tried to work with the FICOs of the Experians, but our knowledge is going to be challenging because it'll be very expensive, and they don't necessarily appreciate some of the bottom-up challenges of doing underwriting in China.
You said the other.
Sorry, go ahead.
Sorry. You said the other competitive advantage lied in the risk management,
Right.
risk management experience. So, so how did that experience relate to, say, the matchmaking of borrowers and lenders within the?
That's a good question.
lending apparatus?
So the entire company, it's not just about technology. The whole way that they hire people, the way they organize people, everything has to do with risk management. So the way the way the bonus works, the way that they have both I'll give you one example. Even though this system is a centralized system in Shanghai, and the people in 15 cities originating the loans, we have branch offices. But the way he's designed it, and his years of thought have gone into this, how do you control the biggest risk in China, if you look at where people are losing money in doing individual loans in China, 2/3 of it is application fraud. It's actually not people not being willing to pay their loan, it's fraud. So how do you solve application fraud? And part of the problem is if I'm a loan officer in the field and the headquarters is far away, I may be lending to a relative that there may be no incentive really or intention for them to pay back. So how do you come up, not just a system that does the credit check, et cetera, but how do you organize effectively? So what they do is they have initial underwriting screen is actually done at the branch level because you want the individual underwriter to have some ownership in the decision. Then it's sent to the central decision making for another level of check for fraud, check for underwriting, check something we call the social stability score, which actually has a lot to do with predictive power people willing to pay. And why you do this is because then each of the cities compete with one another because they want to have a higher approval rate. The other thing that we do is that if a specific city, if the delinquencies go up, they're not allowed to issue more loans until they get those delinquencies down. So there's this whole people art and also the way they're compensated. So it's not just that there's a system and it works in a black box in Shanghai. It's actually how you organize the people and how you cross-check and how you manage. Because if effectively you say, because your delinquencies are going up, you now can't originate more loans, that means they can't make more money until they sort this issue out. So there's actually, on multiple levels, fraud risk, though, I'd say, is one of the most important. And there's underwriting risk. It's really, are you looking at predictive power of people's willingness and ability to repay? And that's also a whole other layer to it. But I want to get away a little from the technology, also talk about the human side, because people could get so focused on algorithms, but that's not sufficient. You also have to organize appropriately.
Yeah, I think one of your competitors, if I understand it, is you had all those people and systems built up before when you're doing credit cards before the regulatory change came. So you were able to quickly mobilize.
That's right. Yeah, Zane had a vision. And I think it's important for anyone who wants to be an entrepreneur. First he spent over a decade, honing his capabilities in one of the best companies in the world to do consumer credit. But he had a vision that one day there will be consumer credit in China. So his vision was, I one day want to be part of that. So even before there was a single credit card in China, he went back. He had a PhD in statistics, had all the right background, all the right training because of his work at Sears. But there was nothing to do then. So what he did is he first convinced the government, well, one day you will need something like consumer credit. So you can need laws. Let me help you draft them. I have a PhD and I'm, et cetera, an eminent person in this field. And then they said, you're going to need a credit bureau. Like, well, what's a credit bureau? Well, here, I've actually written the first book in Chinese on what is a credit bureau, why you need it, and how you should build one. Then he convinced them to build the first functioning credit bureau in Shanghai. Then he went to Bank of China and said, this is a scale business. You can't do this manually. So let me build a system for you. He said, you pay me $1 million. I'll build a system for you, but I own the system. They said, okay. So he built the system. I think at that point there was 1 million credit cards in all of China. Now there's over 150 million. Then he said, what other problems do you have? Because legally I can't do what I ultimately one day dream of doing, which is standing in front of someone who wants to borrow and I make an underwriting decision. But where can I help you? And they said, well, we're not very good at origination. It's too expensive, and we don't really originate very good customers because a lot of them end up being fraudulent. So Zane said, okay, I will develop a fraud score for you to help weed out application fraud and let me originate those customers for you. And it ended up being he could do it about 20% of the cost that they could do it. And he was able to do it with significantly better credit quality. Because then what he would do is he would take those applications, run it through all our algorithms before we gave it to the bank. Then evolve it a step further. Then they had some loans that weren't being paid. And said, well, we'll help you try to collect them. Because collections is quite important, how to do it in an intelligent, thoughtful, appropriate way. And so he built all these capabilities. And along the way, none of these were making a lot of money. The credit card origination was until they got worried about financial contagion and the financial crisis. But it was to build capabilities because he knew the building blocks. You need to be good at underwriting. You need to be good at origination. You need to be good at collection. You need to be good at risk management. If you're good at these 4 things, those are the key things that you need to be successful in this business. So he learned them by providing these services to the banks. And then finally, a couple years ago, there was a regulatory opening, which for the first time allowed them to potentially do something that he dreamed about doing for years. But he was patient. This is 10 years of effort to build these skills.
Somebody in the back had a question.
I was just going to say, it sounds a lot like a company, L2C in the U.S., that is getting a big rise because they try and calculate alternate ways of credit scores, and they started out by helping the mobile phone carriers underwrite customers they couldn't otherwise. Is it all like that? It's saying, hey, we're going to take a more at-risk portion of your customer base and we're going to handle it for you. And then out of that, they develop all these skills.
Yeah, we tried to do that. We originally said to Washaw Bank, which is a joint venture with Deutsche Bank, we said, why don't we do this? We're going to originate a customer for you, but more than that, we're so confident that we can originate a good customer for you, we'll take part of the credit risk. And in return, we want part of the revenue. They were willing to do that, but it never ended up being a very big business because they were, remember that credit spectrum, they really weren't willing to grow too quickly. We tried to convince Everbright Bank, which is a tier 2 bank, which means that also it's got some private ownership. They're one of our largest customers to do the same thing. And interestingly, the objection wasn't the business proposition. It made sense. The objection is probably what you wouldn't think, but this is the reality of China, is that the credit card division in the scheme of an entire bank is such a small aspect of their P&L that first of all, it doesn't even have its own P&L. Second of all, the division that is responsible for this business, the reporting systems aren't owned there, they're someplace else. So one of the main issues, other than the fact that, well, why should we bother because it doesn't really matter to our P&L, was to break this out on our reporting system so that we could pay you because you did better than we did or give you part of the revenue share actually was a non-starter for them from a practical standpoint. So ultimately, we thought this would be such a win-win, but it was extremely difficult for archaic reasons to get them to execute, on that. So we ended up just agreeing for the time being, all right, just pay us less, 20% of what you'd cost yourself to originate a customer, and let us do that. And then they originated approximately, 1 million cards by the end of the year. Could have done 10 million based on the December run rate, and they were delighted. But that actually intimidated some of the bigger banks, because now the tier 2 bank, we were growing them so quickly that it caused other issues. But that's some of the complexity of working with some of these big institutions. What Zane loves now is with the new regulation, he no longer has to beg someone to do something. He can face the customer himself and legally, make those decisions. But he built all these tools and a lot of goodwill by, helping all these big banks, and they continue to be his customers.
Other questions? Good.
Hey, when we talk about the financial industry in China and some of the classes that I've taken at Brown, I think a topic that always comes up is this huge historical problem of non-performing loans and the issue,
Yes.
and how that's going to affect, like, on a macro level, the stability of the banking system. And just based on your experience there, I'd like to know if you believe that this is as big of an issue as we hear about, or if it's still continuing to be a big issue, and whether CRF has been able to identify, hey, we've been able to reduce the NPL percentage by some basis, or if that's even something you guys look at.
It's a good question. So remember I mentioned before, Brandon, about why don't banks go down the credit spectrum even a little bit? And it's partly historical legacy and now your question is more about corporate lending, whereas we do individual lending, but let's talk about this for a minute. There was a huge problem before a lot of these banks got restructured, privatized, and IPO'd, where it's a legacy of policy-led development, where banks effectively implemented government regional policy, and they lent to entities that they were frankly told to lend to, and a lot of these loans ended up being non-performing. The NPL problem was such a significant problem that it delayed the IPO of a lot of the major banks like Bank of China by years until they could effectively recapitalize and clean this up. This was deep scar tissue, for everyone in the banking industry. So now everyone in the banking industry, most of the P&L, most of the money, the big money comes from corporate lending, and they now get measured very carefully on non-performing loans. And so when non-performing loans ticks up a couple percentage points, it gets a lot of focus now. So that mentality carried over then to consumer lending, which is, consumer lending is a very different business. In corporate lending, you do manual underwriting. In individual lending, you really need to have systems do it. A credit loss of a couple of percent is really, Nigel Moore's founder of Capital One, our advisor, would say you're not taking enough risk if that's all the losses you're experiencing. You're not issuing to enough customers if that's the level of risk that you're taking. In 2008, the Chinese largest banks thought the sky was falling because loss rates went to 1% to 2%. And then they overreacted, said, time out, let's just contract credit provisioning in consumer. Now, no longer can anyone originate a credit card outside a bank branch. If someone doesn't walk into your bank and say, I want a credit card, you're not allowed to issue it. So that was their reaction, not really appreciating that even 2% loss rate is a super prime loss experience. So that's kind of the cultural, historic legacy, and that's still very much in place. Manual underwriting, and now really control the non-performing loan. I think your question, Brandon, goes one step further. So let's talk about 2008. What did the government do in China in 2008? Something we can't do in America. If we, in America, needed to fill the gap because of demand, we had to effectively government spend to prime the pump. What China was able to do is the policy, since we talked about rationing credit, the government could turn to the banks and say, open season, I've now increased your credit allocation. So immediately, effectively, the banks then could implement stimulus by increasing the credit provision that was available to lend out. So that injected a ton of liquidity in the system in 2008. And it's part of, for you entrepreneurs out there, it's made it very difficult because where did this money go? Remember I talked about in the beginning, they only lend to state-owned enterprise of really wealthy people. Well, that's where all the money went. So what ended up happening is over a number of years where private companies were getting more powerful under Zero-G and state-owned enterprises were becoming less a significant percentage of GDP, unfortunately all reversed. It's been over a couple-year trend, but 2008 made it even worse because all this liquidity went towards the big state-owned enterprises. Meanwhile, it wasn't really available to the SMEs. So you probably will see NPLs rise, but interestingly, it's not where it happened before. Before it was happening with policy lending to SOEs. I think now a lot of the problem has been around lending to municipal governments that was off balance sheet, used for infrastructure, and it was part of this stimulus directive, but often infrastructure projects don't pay back in the first couple of years. They'll eventually pay back, but they take a longer time period. So now there's a new head of the CBRC, the bank regulator, and they're trying to sort through this and bring a lot of this stuff that was off balance sheet, on balance sheet, and really try to assess what the non-performing loans are. I think people that are closer to it than I am, because we're not in the corporate lending business, I think NPLs will go up and the banks will need probably more capital, but it's not anywhere near the level of importance like you're seeing in Europe or elsewhere. It is an issue, and they'll have to manage it. But I don't see it posing systematic risk.
What do you think is CRF's competitive advantage over the microfinance institutions like Walker?
Yeah, it's a great question. If you ask the IFC, which is a very big provider of capital to microcredit companies, or if you ask the government of Germany that really likes giving money in nonprofit context to microfinance companies, they'd say their number one frustration is these businesses don't scale. Meaning that I write a check, I get comfortable with the people, but it ends up being a small check, and I'd really like to write a big check because I really would like to help a lot of people. And why doesn't it scale? It's because it's all manual underwriting. So what ends up happening, realistically, your growth is constrained by how many honest and capable. It has to be honest and capable, not one or the other, both. Honest and capable loan officers, because if they're not honest, the money never gets paid back. And if they're not capable, the money also doesn't get paid back. So finding and training and motivating and aligning and staying on top of these people is extremely difficult. And so that's why it doesn't scale. So ironically, a capitalistic approach where we use a system and use a technology that's proven in the West to make small loans and make lots of them, but using a system, ironically, that approach is better able to achieve, in our opinion, the objectives of making small loans to individuals. We don't necessarily have the same objective that they do, but in terms of scalability, that is something that truly is scalable. And most of the people that are doing lending in China, without exception, there might be a couple of examples that are trying to use more system-based, but most of all of them are using manual-based, and that's why they've got to do larger loan size. Otherwise, the cost of originations can be over 10%, 20%, 30% of the loan. And that doesn't make sense to someone that's trying to effectively impact a lot of people's lives.
What about giving out these small loans, say, to people without as much of an established history? Like, say, someone that comes from the rural villages or something that doesn't have, like, say, a hukou. What is their process for evaluating those people's credit?
Sure. So the number one risk in China is fraud risk. So if someone doesn't have a valid identity card, place of residence, or place of employment, you really can't lend to them. So that you have to, one of the most important things is to verify that they are who they say they are, they live where they say they live, or they work where they say they work. If you've done that, then you've just eliminated 2/3 of the credit risk and loss. Fraud is a big issue, doesn't help anybody. So you can't really get around that. But if you can prove they are who they say they are and they live where they say they live, let's just start with that, then you have to make a determination of will they be able to repay the loan. And there are a number of ways of doing it, even if most people have never taken a loan before. So it's not like you can go to the credit bureau and say how'd they do before, because there's nothing in there. But what is in the credit bureau, which is extremely unusual, and they were able to, there's one advantage of a central government, they were in a matter of a couple of years, created an incredibly vast and rich store of data, the National Credit Bureau. So for example, you can look at their mobile phone usage. Do they use their mobile phone and do they pay their bill? It's in there. Do they use utilities? Do they pay their bill? It's in there. The other thing that's very valuable is, even though people tend to understate this, is you do have to make certain social welfare payments. So even if I hide some of my income, I still have to make some social welfare payments. And so these are highly predictive data that you can use to size, their ability to repay a loan. Is this a burden that they're going to be able to comfortably manage? And typically, our business model is if they want to, to give them maybe half of what they want, just because we really don't want people to have difficulty repaying. So that's how you can use the data that's available. The other thing that's interesting that has nothing to do with that, but it's also very valuable, is something that we learned over the years. We call it a social stability score. And this is just something just from being on the ground for 10 years that is also highly predictive of a person's ability to repay. And one thing that we do that's unique, none of the other competitors can afford to do this, and we are able to do this because we have the cost structure that can support it. We do 100% home visit and 100% place of employment visit. But the home visit is really predictive of their ability to repay. Statistically, someone is going to have a health event, someone's going to have a financial problem. That's not what we're concerned about. What we're more focused on, if you go into their home, and this is an empirical statement, this is not a judgment, it's just this is what we've observed from doing collections and from doing underwriting, that if someone's house is tidy, how many air conditioners they have, how many do they have a couple TV sets, how long have they lived at this residence, is the family situation in disharmony, or is there at least some other family members in the background? If that's the case, then the social stability score would be relatively high and fairly predictive of, even if they run into some difficulty, that they're probably going to stay at this place of residence, that there'll be other people that are supportive, that over time you could probably reschedule things. If we found that it's a situation where there's a very difficult divorce, the home is very untidy, that there aren't these signs that this home is something important to them, for whatever reason, it's just in our empirical experience, it's probably a much higher credit risk.
But I didn't understand that doesn't scale at all. I mean, if you have to go make a home visit for every borrower, that's a lot of work.
That's a great point. So interestingly, if we go back to the example of that underwriter that I said had to be competent and honest, the person that does the home visit, it'd be nice if they're competent and honest, but it's not. We don't really need someone who's a highly skilled, trained person. We need someone that goes there, takes a picture of the location, and counts literally air conditioners and TVs and says, this in China, this can work because the cost of labor is so inexpensive. And plus, we have a system that if later it turns out that the person's defaulting, then we have an audit team that can come in and take a look and find out whether or not this person was doing the job or not. And it is true, this cost is a cost that we have chosen to make, but because our cost structure is so much lower than other people, we can afford to do it. And in addition, what all the advisors we work with, and any of you entrepreneurs out there, when you decide to form your own business, you want to find people that are experts in their industry, and hopefully you can convince them to spend a little bit of time with you once a quarter to talk to them. And this company is very, very fortunate. They have a really outstanding advisory board. But ultimately, even though we're not taking credit risk, we're matching people have extra money that want to lend it with people that want to borrow, and we're a service provider. Ultimately, the lenders have to have a good experience. Otherwise, your funding dries up. So underwriting is crucial. And since we know that 2/3 of credit loss typically is application fraud, we just decided that since we have the space in our P&L, that we should do this. But in addition, it doesn't very negatively impact our numbers because the person that's going out to do that visit, to do that evaluation, is a low-skilled person.
Other questions? Brandon?
I'd be interested to hear more about the characterization of your lenders. I know the case mentions your wealth management division. That seems to be something that would have a lot of opportunities in China's people to do with their investments.
One thing that fascinated us, and this was not in Zane's area of core competence, he's good at originating, underwriting, and collecting against loans, but originating funding is something that he'd never done before. And it's a totally different profile, a totally different team, a totally different process. So about 5 to 6 months ago, He's set up in Shanghai on the Bund, right next to the Apple store. There's a German consulate in that building. This is a totally different location than where you go to if you want to borrow money. This is, and interestingly, what we found is something that would never happen in the U.S. We actually talked to the CEO of Prosper. There are a couple of companies that do P2P in the U.S. They have funny names like Prosper, Lending Club, Zopa in the UK, Wanga, but they're real businesses doing very, very well. What they said in the U.S. when they collect funding, the best they can do, because the U.S. is so intermediated, meaning that there's a wealth management firm who gatekeeps your money, they can probably get someone to give $5,000 for lending. In China, what's fascinating to us is our typical lender will give us somewhere between $20,000 and $40,000 US. And our best estimate, that probably represents maybe 20 to 30% of their net worth. So our segment, there's a super high net worth segment. That's not our segment. You know, UBS and HSBC takes care of them. They're very spoiled. But if you go down a level, there's a whole group of people that say, gee, I put my money in the bank account, I get paid a couple percent, inflation's double that. Why is this good? And so we say to them, well, we could pay you 12%. And there's a 5% loan loss reserve. I don't think they really necessarily understand what this means, but losses would have to go above 5% before it would impact your 12% return. And so what we found is that literally from establishing this division from nothing, it's now, in December, it's now bringing in $5 million a month, so about $60 million run rate in just one city alone with a team of 50 people that didn't exist 6 months ago. And what the fellows at Prosper said, this is incredible. What this says is that China there's such a need, and it's really not intermediated, because in the US you could never get that percentage of someone's net worth out of the gates. I think part of the other reason why, and Credities, which is our competitor, they've been very successful also. I'd say their core competence is originating funding, whereas ours is in underwriting. But part of it is because there's this need. People have savings. The stock market's been terrible for 2 years. They have negative real interest rates. That's why some estimates say $1 trillion has come out of the banking system trying to find homes in businesses like this, but typically in the black market or family pools of money that get lent out. And so there's a real social need, for a product like this. So that's something that he's now expanding after Chinese New Year to 3 cities. If there's one big dial on this business, assuming underwriting stays stable, it's funding. That's the whole pacing of the business. And currently, 100% of the funding is coming onshore from Chinese individuals that I call them high net worth or affluent, that are looking for products for their capital. And we take that very seriously because this is obviously a meaningful portion of someone's income. So part of what we've also asked the company to do, that we talked about at the beginning of the case, that everything you do in China, you really want it to be in alignment with government's policy objectives. So I don't think any government in the world would want someone to lose a big portion of their life savings. So one of the crucial things that we've done is putting in place a 5% loan loss reserve ahead of their 12%, or a lot of these other peer-to-peer models, you pick which loans you make. We don't want people doing that. We basically take a pooled approach so that no one gets adversely selected. There's also a compliance thing. We don't really want people that are giving us money, if it's really not a suitable product for them. They really shouldn't be giving us their capital. So it is a big opportunity, but it's also a big responsibility.
Is consumer lending heavily regulated by Chinese government in China?
That's a great question. So one of the fascinating mysteries about China, I think, is if banks don't lend to where 2/3 of the GDP growth and employment comes from, where did they get their money to start? It's a really interesting question. And the answer is that historically it was families getting together, pooling some excess resources, and that's originally was not legal, that was extra legal, but that's how the initial businesses got started. Then, of course, like in every economy in the world, there ends up, outside of your family, ends up being a black market for capital. This is where, if you're a SME, which is where all the job growth and GDP growth, the majority of it came from, that's where you got your capital. And so what the Chinese government decided a number of years ago is that this could be also a threat to social stability. If you have people effectively gathering, let's call it assets, deposits, and let's say it was a Ponzi scheme, then all of a sudden this could be a real threat to social stability. That's one way to look at it. The other way to look at it is if this is where most of the job growth and where most of the GDP growth is coming from, we need capital to go there. And if the banks, for whatever reason, are not able to do that, we need to find another way. So about 3 years ago, maybe it's 4 years ago, the Central Bank of China, the PBOC, said we need to do something about this because the banking regulators, the job's not getting done. So this kind of goes back to one of the a very interesting principle actually Mao laid out a long time ago. It's called the two initiatives. And and this is actually fundamental, I think, to understanding how innovation is managed to survive in still a centrally dominated economy. The idea of the two initiatives is that the central government can take the initiative on certain things, but the local governments also must be allowed to take initiatives on certain other issues so that innovation doesn't get stifled. So what the PBOC said, even though the banking regulator didn't want this to happen, said, you're not getting the job done, Mr. CBRC, Mr. Bank Regulator. So we're going to follow this two initiatives idea. We're going to come up with a regulatory framework where the provinces and the counties, if someone gets one of these licenses, they are allowed to innovate. We'll have some frameworks, some general parameters, but we'll leave the rest up to the provinces and to the counties where these licenses are granted. So this is the idea of the two initiatives. So let them do their thing. You banks, you do your thing. And as long as the two don't infect each other, that'll be fine. And so they opened up this regulatory window about 3 years ago. Now there's several thousand of these licenses. In addition, what they've done is they've come out and said that if two individuals decide to lend to one another under Chinese contract law, that's okay. Whereas in the early days, it really wasn't okay. But now they're saying that's okay. And so that's how CRF, in a service model, can say, you're lending, you're borrowing, we're just a service provider that's facilitating, that's okay under Chinese contract law. So these are two different regulatory regimes. So you're starting to see this opening up. And that in last November, the premier went to a very famous region of China where SMEs, probably some of the most famous businessmen in the world, were going out of business because they couldn't get any access to capital. And the premier effectively said that we can't stop this lending activity. We have to support the SMEs. We need to regulate it. It needs to be done appropriately, but we can't stop this. So that was also an important, very top-level statement that was made. So I think going forward, the final thing is that as the GDP growth starts to come down a little bit, and they have a 5-year plan that wants to do consumption, again, if people are in alignment with these policy objectives, there's going to be regulatory dynamism, but in general, there ought to be room to maneuver for people that are doing the social objectives, the business objectives that they've laid out. So it's a much better regulatory environment than it was a couple years ago.
I mean, a whole lot of this case is about regulation. Are you worried about another change in regulation? Are you worried that if you're too successful, you're going to get reined in?
It's a great question. And there's, I think anyone that does business in China, whether you're in a regulated industry or not, the government's your partner, whether you want to recognize it or not. I mean, who would have thought a number of years ago that a basic consumer product like milk, for example, could become such a highly contentious, politicized issue. So I think anyone who does business in China, it's one of the most policy-led economies in the world. It will likely continue to be one of the most policy-led economies in the world. That's not going to change. So if you want to do business in China, the government is your partner, whether you know it or want to recognize it or not. So then the key then is to try to do business that's in alignment with the government's policy objectives. Having said that, yes, if you'd ask me what's my number one concern always in any business I've been involved in China, it's regulatory risk. So then the question is how best to manage that, and because you can't eliminate it. So one of the best ways to manage it is, one, do things that are in alignment with the policy objectives. Two, you need to recognize that they're your partner. So all the companies that I've been involved with that have been successful early on did a lot of, I'm going to call it free consulting work, for the government to help them understand what's important and why is it important, and helping facilitate. So when Zane helped build the first functioning credit bureau, he probably lost money on it. When he built these banking systems that all the big banks use, it's break even or at best, maybe a little bit cash flow positive. When he spends time with the PBOC talking about what's a good guy versus a bad guy and how do you tell the difference, he's not being paid for this. But the idea is, and it's a really interesting question, if I have 5,000 of these people doing small loans, how do I distinguish who the good guys are from the bad guys? That sounds like a trite question, but it's not. How do you measure risk? If you measure it, should you have to publish it? These are questions that really the regulators are struggling with. And so part of what Zane's trying to do is, if we're not careful, everyone will get tarred with the same brush. If there's a bad actor, because they can't tell the difference between good practice and bad practice, you'll all get tarred with the same brush. So part of the investment that he has to make is talking with the PBOC recently, how do you measure risk and should it be published? We think it should. And what are the different ways that people measure risk? Let's just agree one metric and then educate what's the difference. Is capital adequacy important? And how should you look at that? These questions aren't being asked right now, but they should be asked. And so we can't eliminate this, but by being part of that dialogue and is how we try to manage it.
Somebody down here had a question, yeah.
So part of the attraction to these people who are giving 20 or 30% of their net worth to P2P lending is that there is a much higher return. And I was wondering, because I have literally no financial background, how sustainable is this high return? Is the money, is the rate so high in China right now because it's being channeled to SMEs and because it's funding entrepreneur activity, or is it just because by nature of the P2P lending you can receive like a 15% or 10% interest rate?
The main reason why it's possible to provide a 12% return to funders is, and why is it sustainable, is because China is so credit constrained, because individuals and SMEs literally have no access to credit through the formal channel, that you don't even have to go down the credit spectrum to find thousands of people that are really super prime, effectively people that you'd love to lend to all day long. And even if you went down a couple of notches, it's still a vastly underserved market. And the government has set a framework. It sounds high when you hear it, 4 times the official bank rate, which is 24%. But if you actually talk to nonprofit microlenders and ask them to go through the unit economics, origination, underwriting, et cetera, and losses, they will tell you that they can't make their numbers work at only 24% because they do manual underwriting and it's very expensive, et cetera. So what's interesting is though 24% may seem high to this audience, maybe compared to U.S. credit card, it's not that different, and then their fees, et cetera. But actually, the cost in a lot of these small loans, actually, to make the numbers work, you actually need something higher. You need something typically like 30%. So a lot of the NGOs have been lobbying the PBOC saying you've got to lift to a higher number or allow us to have leverage, because otherwise we can't make this work. But the reason why, even given that, there's this vastly underserved segment that really are deserving of credit and just can't get access to it.
So you're saying how when you, I was wondering if there's anything proprietary about the system that has been developed, other than sort of the expertise that Zane had built. Is there anything sort of proprietary about, say, someone else being able to use some of those similar parameters to then be able to initiate some other?
So this system, it's a tool, and if you give someone a hammer, if you give me a hammer, I probably will do an okay job. You give it to a carpenter, they're going to do a great job. And so we've given these tools. We've tried to train the banks how to use these systems, et cetera. But the tool is only as good as the thought and the expertise that goes into using it. And it's a learning system. So we tell people how it is that we do it, some of the things that we do. We've sold the system effectively at cost to some of the largest banks. It doesn't mean that they can do it, or they're willing to do it, or have a governance structure to support doing what we do. There are obviously certain aspects of the algorithm that we're constantly refining. It's a test the way to think of it, it's a test and learn system. It's a learning system. So once we enter a certain region and we have 1 year of underwriting data, we've already learned from our successes and our mistakes. We've now optimized our algorithm. So even if we told you last year's algorithm, it's now different than a year later. And so it's a constant adjusting, a constant learning process. So it's not just the tools, it's not just the algorithm, it's the group of people that are around this that are able to build an organization and implement. It's ultimately still the people. I think with all businesses, it's about the people, but they have intellectual property, they have an edge that they capitalize on. So, for people to catch up, I mean, we literally for 8 years taught all the banks that should be our competitors, and we still help them, how to do credit scoring, how to do decision making, et cetera. But it's just fascinating. There's a number of legacy issues we talked about, some archaic, some historic, why they're not likely to be main competitors of ours anytime soon.
Yeah, this question is more of a general state of the Chinese economy.
Mm-hmm.
You mentioned earlier about the GDP numbers coming down a little bit. Going forward, with the leadership change this fall, the big question is whether or not the big engine can continue to grow at its historical pace, 9%, 10%
Sure.
annually. The party has projected that GDP growth to 8.5% this year,
Right.
which is still pretty high, but it's really leading to some worries. So a lot of analysts say that China is now having a soft landing as opposed to a hard landing. So what's your take on it?
Well, there's a Professor Liu who does research for the State Council, is written some excellent papers and given talks about the modeling that he's done as a framework for China's GDP growth. And I think it's extremely thoughtful. And a lot of the mistakes that the Western media makes about China is they think about one country, but you actually have to, I'm going to simplify it. Let's just think about it as rural and urban. Let's think about it as east and west. I'll keep it very simple. They're extremely different. And so whereas in the more developed tier 1 cities along the coast, their GDP per capita has reached a certain point where in almost every country in the world, when it reaches that point, the ability, the advantage of backwardness decreases. So the advantage to catch up decreases. So the GDP growth does modulate down. And that's just a fact of life. The cost of real estate now in Beijing is as expensive as New York. These are the issues that you're bumping up against. But in the western region of China, which is under-urbanized, still largely agricultural, still has a lack of infrastructure, they should be able to grow at a much higher rate. So there's a rebalancing that's going on. So what confuses people, if I say, well, let's look at Shanghai, let's look at the cost of real estate, let's look at the growth, people could get very pessimistic. But that's only one part of the China story. There are 100 cities of 1 million or more. You can't just focus on 2 to 3 cities. You need to look at it. So he has a very interesting model where he talks about 3 different zones and compares purchasing power parity, models it out, and has great data to back it up. So his conclusion is that China probably will come down a couple percentage points over time, but there'll still be enormous opportunities in a lot of regions. So I don't think it's bad news. I think it's just this is the state of development that they're at. And I think though people are, if you're looking for opportunities, probably the focus needs to shift a little bit westward. And the last 5-year plan, that's exactly what they're doing. That's where a lot of the infrastructure investments, where a lot of the stimulus money went. And that over time should help build the next stage of growth. So I think it will come down. But check out his work, I think, because he's, one way, a very interesting thing to understand China, the academics actually have a very significant influence on policy in China. So there are certain think tanks that have a very large impact on government policy. And Professor Liu, who does research for the State Council, that's, I think, at least then you get a sense of how the government is thinking about it and why they've probably taken down a notch, their growth expectations. If you just jam more stimulus in there to get the growth higher, I don't think that's a good thing either, because if inflation creeps up, that really makes people nervous. So there's a rebalancing that has to go on. And that'll really be the job of the next administration to hopefully successfully execute, that rebalancing.
She's talking about urbanization.
Right. I mean, a lot of people talk about the 5-year plan going from more investment-led to consumption-led, but the local Chinese investors and managers that I talk to, there's still a lot of investment to go. It's going to take a while to transition because half the people in China still live in rural areas. That's like the US in the 1920s. There's still a significant amount of infrastructure investment, urbanization to go. The good news is that one of the biggest political risks in China was the one that I watch is the massive rural to urban migration and that being a potential tipping point for social unrest. But now what's happening this Chinese New Year, and some of you may have read it in the Times, but we've been hearing about this from our managers for a while. People used to leave their families, back in the poor part of rural Western China, go all the way to the cities, work, come home at Chinese New Year, and that's how they supported their families. Now, because of all this development that's starting to move westward, that there's actually a lot of jobs, maybe they still have to go 5 hours from home, but they don't have to go 15 hours from home. And so this Chinese New Year, a lot of people that work in manufacturing are not going back to their jobs. They're actually finding jobs maybe 5 or 6 hours out because maybe they get paid less, but their cost of living is significantly less, and then they can actually see their families a little more frequently than they could before. That to me shows a sign that it's starting to work, that the rebalancing is starting to work. People can, because the transportation network's in place, because the urbanization's reached the point that there are decent jobs in these tier 2, tier 3 cities. So that's, I think, some ray of hope, and also this stress that this all these rural migrant workers you read about, the freshmen read, when they did their reading this summer before coming to Brown, it's incredible stress it was putting on the infrastructure, on health services, et cetera. So if you can spread this out a little more evenly to a lot of these other cities, I think it's a good thing for China.
I think from the case it says that CIF decided to focus on P2P lending, but at the time it was given a lot of options, right?
Right.
So I'm just wondering what goes into the decision to focus on P2P lending, because given the regulatory risk, it seems that diversification is a better way to sort of balance the risk.
That's a good question. One thing we were talking about, I think one thing that's interesting for students, people always ask, well, where do you see the next opportunities in China? And I think a more interesting question is not the specifics, but how do you spot an opportunity? What are the characteristics? And there's some very interesting work that's been done in this. And there's one metaphor I like to use, which is a gentleman named Sir Ronald Cohen, who founded Apax. He basically brought the venture capital model to the United Kingdom. He wrote a book called The Second Bounce of the Ball. And what the metaphor, but I think it helps explain the nature of grasping an opportunity. He says, if I take a ball and I throw it, probably everyone in the room will be able to judge where it's going to first bounce. And he says, that's not an opportunity because everyone in the room can spot that. So if there's a business idea today, Facebook, perhaps someone might say, gee, what a great idea, let's all do Facebook. Well, it's too late. Now that it's obvious about the IPO, it's too late. So he said the essence of entrepreneurship is to try to grasp uncertainty about where that second bounce is going to occur, because everyone in the room is not going to be able to judge that second bounce. But you have to be willing to grasp uncertainty, because by the time it's certain, there'll be too much capital, too much competition. You won't be able to have the barriers to entry, the competitive advantage. I'm not kidding you when I said 10 years ago, we had executives, senior executives from MasterCard, Visa, et cetera. We had a debate. Will Chinese use credit cards? Serious debates when we were trying to get their initial investment because they weren't sure, because of Confucian-based culture, that they would. Zane's judgment, he had to almost be evangelical about this, is that yes, there is a need for credit in China. People will borrow and spend, et cetera. So once it's obvious, now there's 150 million credit cards in China and people revolve. So on peer-to-peer, his observation was, I need a clear regulatory framework, and there are two that he had. He talked to the regulators and said, what should I do? They said, get an MCC license. They also said under contract law, peer-to-peer should be okay, but it's not certain. But, and his judgment was there's this vast need, it's in alignment with government's policy objectives. He has unique competitive advantages, but it's not certain. But that's the essence, really, of an entrepreneurial opportunity. When Charles Zhang of Sohu, first asked help me bring the internet to China, people used to ask me, you want to do what, where? You know, why should that make any sense? By the time it was obvious, it's too late. You know, the Baidu's, you know, Sohu, NetEase had already established their brands. But he had to make that move. He had his own judgments as to why he thought, but it's that second bounce of the ball. So
Well, we have one more question. Yeah.
This is again another general question. So last November, when I was in Japan, the commercial, like the CEO of the China commercial bank, even talk about those kind of risk management from the federal level versus the local level. And it says like he says that they will focus on the central commercial bank will focus on the more city regions versus the central government is hoping to have more local small commercial banks to handle all the small like loans.
That's right.
So I'm wondering for companies, foreign capital like J Capital, where do you see yourself in those kind of already split, you know, like market? And where's the comparative advantage, like similar?
So on CRF, when they got the MCC license, the PBOC is extremely thoughtful about this. And they would, and there's actually Professor Brown's done some interesting work on this, that if you have more bank intermediation, it tends to positively contribute to GDP growth. And in rural areas, you know, there may be bank branches, but they're not really lending. So how can the government solve that problem? And so when the PBOC is very thoughtful, when they put together this test, you know, the two initiatives, local initiative with the MCC license, they said that the specific rule allows that after 3 years of doing lending, if you have successfully met, you know, their objectives, they will allow the provincial government to convert that license into a township bank. There's some other requirements. You have to get a partner, et cetera. But they're effectively saying that we'll do an experiment, let's call it 5,000 experiments, and a certain percentage will fail, a certain percentage will be successful, and those that are successful, it's up to the management, but we will allow them the ability to turn into a township bank. And why would that be valuable? Because then you'd be officially and legally allowed to gather deposits. But their test, they'll know before they allow you to do that first whether you're good at giving out loans in the first place. So the law currently envisions a potential solution, because what didn't work was giving lots of money to Agricultural Bank that went all over the place, lots of NPLs, you know, they had to clean it up. They need to find a different way. So the government is mindful of the issue. They've got it a policy experiment, and they'd like to see, and also these MCC licenses, the other thing I should mention, though the province approves them, typically they're being granted in counties. And counties in the Chinese framework is really a rural, by definition, a rural area. They'll also give them in cities, but it's a much, much higher capital standard. So the policy really is designed to get lending intermediation happening effectively in rural areas. So the PBOC, they're extremely thoughtful. They put a lot of thought into this, and it's an experiment. And then they'll try to cull the losers and then support the winners. And the ultimate goal is to try to get credit flowing to SMEs and more credit flowing in rural areas. But it's going to take time.
Well, I think maybe to make this less formal, and you know, people have got other things to go, and the people who still have some time and have some questions, why don't you move down the front and just informally ask Drew what's on your mind? And
yeah, I really appreciate you all coming and spending some time with us on
we appreciate your
Valentine's.
coming. And,
I'd be happy. For me, this is fun, so I'd be delighted to answer any more questions anyone has.
but again, I know some of you
Sure.
have other constraints and all that. So please come down. Thank you again, Drew.
Thank you.
Is your company fully implemented? Do you already start, registering in China and domestic?
Sure, that's a great question. So our investor base typically are international investors, and international investors feel more comfortable typically investing in international entities. So what we've often had to do is, although the companies are local companies originally, we have to restructure them so that they can be foreign-owned entities. Typically, it's the terminology is called a WOFI, as you're probably familiar. Interestingly, though, in the last couple of years, there's been a bit of a legal change, whereas in the past, all the sensitive industries weren't allowed initially to be foreign-owned. They effectively came up with a compromise that allowed them, through a proxy structure, to be foreign-owned. That's now being questioned. So you may see in the future that there'll be certain opportunities that it really can't be anything other than a local company. But historically, that's how Western capital has felt most comfortable investing in. I know that you're with a RMB fund, so RMB funds, they obviously don't have that issue because they can invest in RMB. But for dollar or international investors, that's a challenge that we have to face.
You mentioned earlier that these licenses are given out at the province level or even the county level. And so, for example, in America, having these kind of licenses of non-banks acting as financial institutions at the local level has created a lot of competitive barriers. For example, anybody that wants to innovate in the payment space is being restricted, by having to seek a bank. Because there's just a billion different loan origination, money transfer, et cetera, licenses. It seems like right now this is actually a boon for China because it's so hard to rise up to the central level. But do you foresee this being a big issue in the future as a competitive barrier?
So is your question, will China local experience become somewhat like the local experience in the U.S. where regulation actually becomes a problem?
Right. So, for example, American Express can issue certain products in certain states because of certain laws. And I'm wondering if that will become a problem in China, too, even though right now it's actually a boon that you don't have to go to the central government.
Yeah, it's interesting. So different countries have different problems based on their state of development. So in the U.S., it's a very mature market, over-penetrated, and sometimes people take extreme risks or do things that aren't in the customer's interest in order to try to squeeze out a business. China's a totally different problem, which is that literally vast segments have no access to intelligent products or credit. So what they're more worried about is the central government, effectively the bank regulator, prohibiting anything except a bank issuing a credit card or a loan. So they had to open up some breathing room, some oxygen, if you will, for something else to occur, because for after 10 years it just wasn't working. So by giving it to the local government, what they've done, though, there's a very specific framework that the PBOC has set up of 5 or 6 or 7 things that you must be to get one of these licenses, and very specific rules, guidelines. They don't fill in all the blanks, but they fill in quite a few. And then the local county gets to choose, let's say 2 per county, but even before it can be approved, the province has to review it to make sure there's no cronyism going on. So there's some checks and balances. I mean, I think, could you have a situation where the local government is just so difficult to deal with that it makes it very difficult for you to run your business properly? For example, they could effectively insist that you make loans to certain people or entities that you don't feel are appropriate. That could occur, and that's part of what the company's strategy. Right now they have one of these licenses in one county. They probably over time will seek multiple of these licenses because you need to diversify your regulatory risk. Just like in the state of New York one day, maybe it gets very difficult, but it's easier in California or vice versa. So you have to I think in China you also have to take a similar approach because also it's somewhat people dependent. Who is your regulator? The rules may be clear, but who is your regulator can have an impact.
Exactly. Yeah, it's just one of those things that I run a small prepaid card company, and it's something I always think of, might be okay in Rhode Island, but in California, couldn't run the business.
That's right. In fact, we met with the CEO of Prosper recently, and he talked about the whole challenges he faced having to register all his product with the SEC, and in addition, now that he wants to use more of a bank model. In each state, he's had to run a whole process. It's been very painful and difficult.
I have a question. You said that most of your business is around the coast of China and right in the coast.
Well, I was more simplifying to say that when people think of China, often people get confused because they don't realize that in the same country you could have very urbanized, very wealthy, high GDP per capita, high cost structure, but in the same country you could have very rural, very poor, very low infrastructure. So I was more trying to make the point that can be confusing when people try to understand the. Mm-hmm.
There's like a huge debate or very sensitive issue in China now is Wu Ying, who is like doing something about lending and borrowing money, but is accused of defraud. So it's like that. There are some relatively wealthy people in China like to do some investment that is very risky.
Right.
Yeah, so how do you avoid or how do you view this point?
Yeah, so fraud risk is the number one risk that we've observed, as we talked about. So that is fundamental to address that, and its application fraud is very significant in China. So I think that's something that people just have to be aware of. There are criminal rings that are professional at scamming banks. They'll set up fictitious companies with fictitious employees that fictitiously apply for credit cards, and then the day after they're issued, they draw the line, and then the business is gone. So this is a fact of life, but it's a fact of life in all the markets in the world. They're professional rings, global rings, sophisticated rings. This is what they do. But I think you're also talking about suitability of product. You know, some people are willing to take very high risks for high return. We don't feel that that's a suitable product, you know, for our segment of people that are medium, affluent, that are putting, you know, a meaningful amount of their retirement money at stake. So our goal is to lend to super prime customers with this very low risk. The highest risk we've observed to date is probably a 1% loss rate. It could go to 3%. We have a 5% loan loss reserve. The company has its own capital even behind that. And as a legal matter, we don't have to step in, but as a business matter, we probably would if we ever had a spike in loss rate. The soup that, remember I mentioned, is like a super affluent segment that UBS or HSBC or other banks service. These people want higher return. They're even more aggressive. But they also have the wherewithal to stand the risk if it's a failure. Also, they probably can lean on the banks if there is an issue. But that's really for a very privileged segment. We don't really try to service that segment because we don't really need to. There are plenty of people that want to borrow money that likely will pay back. But there are people, even in the U.S., for example, U.S. hedge funds, when they invest in a Prosper or a Lending Club, you know, they want a 22% type return, but it's different. They are big professional institutions. They do their own due diligence. They know they're investing in a higher risk tranche. You know, they're set up to do that. But our funding source, they're not that sophisticated, and it's really not appropriate, you know, for them. And 12%, frankly, is a really good return for them. So our cost of funding over time we hope to bring down because we don't think we really need to pay that much. But for now, that's what we're doing. You know, if people really want a higher return, you know, there's the equity market. There are structured products, but that's you know, those are products that compete with ours. I think a lot of people, they want something that's stable. They want something that, when we opened up our wealth management office, we brought the mayor of Shanghai. We had 3 bank credit card division heads speak. We did it in a public forum with a dragon dance, and media was present. It's to say, this isn't sunshine. This is legal. You can do this. It's perfectly fine. It's not like you have to go in some dark corner and lend out your money, which historically is how capital formation occurred in China. So I think people kind of appreciate that. But the ultra high net worth, no, they want a higher return, but they're willing to take higher risk. That's not our segment.
So, like, how do you see the growth potential of CRF? So I saw that they still haven't realized the profits yet. So how do you?
Sure. So this case was written at a key decision point. You know, since then they're now cash flow positive. They'll be profitable in the first quarter. They grew 10 times year over year, and this year their plan is to grow 10 times again. And the infrastructure investment has already been made to support that growth. So the only thing that would prevent them, other than a regulatory change or an underwriting problem, would be really just the funding not pacing the development of the business. So In 2008, Zane proved his ability to grow 10 times in a year, and because it's a scalable approach. And so I think he's poised for that. But of course, there are these risks. Any regulatory change, right now we don't foresee any, but that could happen. Could there be some hard landing? China's never really had a hard landing, but if they had a really hard landing, don't foresee that. But and then the third would be funding. It could be something as simple as the stock market rockets. And all of a sudden, we saw this in 2006, 2007, people rapidly shifted their asset allocation. So those are the risks in their plan. But if those things hold, he's someone who's proven his ability to deliver that kind of growth. He's also quite conservative. He's been doing underwriting for 10 years, but under this underwriting policy, he's been doing it for a year, and he's a very empirically oriented person. He wants a year and a half, 2 years of return data and they call it tail risk data, before he's willing to really ramp the portfolio growth. If he's comfortable at the end of the year and he reaches his plan of a $100 million loan book, then he probably the next year might triple it, but not 10 times. He wants some seasoning of the data because consumer lending still is very early. It's still early stage in China. It's not. They call them these risk curves. In the U.S. and developed markets, you have decades of data on the risk curves. In China, they're still developing that empirical record. Did you have a question?
So can you say it again, why is there a peak in the 2009?
Why is there a peak?
Yeah.
Oh, sure. So they had a plan, and they actually hit their plan. They completely achieved their plan. And in 2008, with the cost that they'd already put on the ground, they could have grown 10 times again with no incremental cost. And so it was really humming. But then the financial crisis came, and the government overreacted to the risk that the contagion would hit China. So the government said, we're now going to try to contract credit provision. It's partly because they were, we think, can't prove this, but lobbied by some of the more powerful banks because this became a competitive threat. But effectively, they then said, you can only issue a credit card in a bank branch. We are a third-party originating a credit card. So our choice was, do we try to be clever about this? And the banks were kind of begging us, why don't you just say you're employees of our bank and continue doing what we're doing? And we just said, that's not the way we're willing to do business. So we actually, it was an extremely hard decision. They effectively had to let go 5,000 people, had to close 30 cities, preserve the capital, and then wait for the next opening. So it was an extremely difficult experience, 2009, to have achieved a 10x on your plan, knowing that if you just kept on doing what you were doing in December, you were effectively on an IPO trajectory, to then have to shutter it. But that can happen. And to his credit as a leader, he was able to get all the key employees to stay with him, to take a 1/3 salary cut, and effectively have their sails flapping in the wind for a year and a half, 2 years, while they decided the next course of direction. That takes leadership. So that's part of, really, when you do a business, I know all the ones I've looked at, it's usually not the first plan, it's usually the second or third. It's based on some core capabilities, but it's the second or third where everything lines up, and so it's really about the leadership of the team. And so the reason why they wrote the case at this point where it's still not clear, is P2P the right decision? It's, you had to make this hard decision of which direction. I can report a year later, they grew 10 times. It's still a small loan book, it's about $15 million, but he's now believes that the risk metrics are in place where he can then grow 10x with no additional investment. So we'll see. This year is an incredibly important year for him, but he's now cash flow break even, and the end of this quarter he'll be profitable if he achieves his plan. As January, he's ahead of plan. So he's on an exciting trajectory for him. But there'll be challenges. And as Dean Hazeltine talked about, are you worried about when your business really becomes successful that someone will take it away from you? And that's something you always have to think about. So at some point we probably will have to get a government-related partner, more explicitly, whether they become a minority shareholder or maybe the IFC. These are ideas that we're discussing so that you have someone at the table who can advocate So that's something that you also have to think about. But given the fact that this is aimed at a social party, the government, I think it'd be more easy to find allies than enemies on this. So that's something we have to be mindful of. I told Zane, in some ways, failure can be easier to accept. Challenge, hardship. Success can actually be extremely difficult to manage. In some ways, it's a much harder challenge. And so that's something that he also has to start to wrestle with in the next year. The fact that before he could be kind of low profile, now he has to spend time with regulators. He has to be visible in public and educate. He's going to have to deal with jealousy and rivalry. He's going to have to see people maybe want to splinter off and set up. These are different challenges. So this year he's going to have to, there'll be things that he'll grapple with. But I'm excited for him. I mean, he spent his whole life wanting to do this, and now it looks like he's going to have a good chance. I really appreciate you sharing your Valentine's night with me and talking about China. I really appreciate your questions. They've really been a lot of fun and wonderful. I can feel the entrepreneurial energy, in the room. A lot of people really wanting to enter that journey. So it's very exciting for me to spend this evening with you.
Well, thank you, Drew. It was very, very worthwhile.